So last week we did trends and trend lines. So that's what we did last week. We explained that there are three types of trends. We have the upward trend, we have the downward trend, and we have the sideways trend.
Sideways trend, yes.
Yeah. So we said that in between trends, you will see other trends in between trends. So one thing I want to let you know is the market does not move in a straight line. Okay, last week you saw me drawing straight lines like this. You can see that the market is not moving in straight lines like this. Do you understand me? So the market is not moving in straight lines like this. The market is going up and down, but it will be creating all the structures. Are you with me now?
And the up and down, sometimes we can call it pullback or retracement.
Yes, this particular down part, this part is what I told you is called pullback or retracement. Pullback or retracement. Why this part that is in the direction of the major trend is what you call impulse. You understand? It's what you call impulse. All right, let's do the first strategy that we'll be using to trade. But remember, anything in between I'll be teaching you. So the first strategy we're going to be talking about is supply and demand. Supply and demand. Supply and demand. Let me open the whiteboard. Okay, we'll be looking at supply and demand for this week. Supply and demand. So when you hear the word supply, it's a normal word that economists use for, like there are two forces in markets: supply forces and demand forces. So supply is when supply is like the opposite of demand. So if people are in need of something, that means they are in demand of something. So when they are in demand of something, a supplier will have to supply them. So that means a supplier sells while a demander buys. Do you understand me? So someone that wants to supply products sells the product, while someone that demands product buys the product. I believe you understand that analogy I just gave.
Yes, sir.
Okay. So in the forex market, we have the responsibility, or we have the duty of either buying or selling. So at every point in the forex, in the binary market, whether a forex market, everywhere, the responsibility or what we do at every point in time is either to buy or to sell. So someone will look at a chart, and when you look at the chart, from the way the chart is, the person will know that I should sell. Someone will look at the chart, and from the way the chart is, you will say I should buy. So you buy from a demand zone while you sell from a supply zone. Okay, so you buy from a demand zone while you buy from a supply zone. Let me just go to the chart straight up and show you what I am talking about. All right, let me use this part of the chart to explain what I was talking about to you. So a demand zone is always at the bottom, while a supply zone is always at the bottom, at the top. So in this case now, here is the supply
zone.
Yeah, supply zone. So this is the part people will sell from, while here is the demand zone. So some people represent the demand zone with a blue color, while they represent the up with a red color for the purpose of teaching. But I believe you understand what I mean. So I don't need to be switching the colors anyhow. So a supply zone is where market sells from, while a demand zone is where market buy from. So how do you know a demand zone? A place where market bought from initially. That's how you know a demand zone. A demand zone is a place where market bought from. A place where people bought the market from initially. So let's use this case now, this particular part of the chart as an example. You will see that the buyers bought from this level before. Then the market went up to a previous supply zone, and then it sold from that place down to this demand zone again. So that same area that same price level area where they bought from initially, they bought from it again. So when it got up here again, it sold. So supply and demand is simply buying market from where it bought from initially and selling market from where it sold from initially. So let me clear all of this. Now, whenever a particular market breaks a demand zone downwards, like you are seeing here now, this market came to a demand zone. It was supposed to buy upwards, but it didn't buy, did not buy. So it's not every case. There are many other bigger picture to look at when you are trading. So that will lead us to many other stuff later on. But just know that sometimes market can break your demand zone. And when market break the demand zone, market will come back to it again before selling. And when market comes back to it, that previous demand zone will now turn to supply zone. So they call it flip zone. I will tell you what that means. Flip zone. Let me write it here. Flip zone. So what that means is anywhere the market was regarded as a demand before, if the market breaks it down, like in this case, the market broke it downwards. It was supposed to buy from here, but it didn't buy. Or rather, when the market broke, it got here, it acted like it wanted to buy. It printed a blue candle in that place, like it wanted to buy. But remember, this is not like the candle I taught you. This is the one I taught you. Are you seeing it here? This is the one I taught you. This candle is not the same as this one that is here. Are you seeing me?
Yes, sir. Yes, sir.
They are different. So it did not print that kind of candle. And you can see that this one that is here, that looks like it, the body is bigger than the wick, so you will not take it. So that is sometimes how I wait for the market. So once you see this type of candle at the bottom like this, at a demand zone, then you know. Once you see that candle at a demand zone, then you know you should be buying. Okay? So, and when you buy in that scenario, you are going to put your stop loss. You're going to put your stop loss below it. How you are going to put it depends on you. So you can put it close to it, but I like to put it away from it. So now, once you see that this type of candle are formed, your own is to press buy. When you press buy, put your stop loss at the bottom here. So do you understand what stop loss is? Hello? Can you hear you?
Yes, sir.
Okay.
Yes, I can hear you.
You understand what stop loss and take profit is, Abby?
Yes, sir.
Okay. So now
I don't know how to put stop loss and take profit in dairy.
Okay, I'll teach you all those things. So now this market broke down from this particular level. But before that, let me show you this other side of it. This part, the market has been a downtrend. So when it got to, let me draw. So this particular place here I just showed to you now was a previous demand zone. Market bought from upwards a little. The market was coming back. When it got, it was supposed to buy, but it didn't buy, it broke it downwards. So you see now that when market returned back into that demand zone, it sold off. So the same thing will keep happening in the forex market. Whenever, whether it's in binary market or forex market, whenever the market breaks a demand zone, that demand zone will now turn to a supply zone in the future. When market returns back to it, it will now sell from there. Take it for example, this area now, you can see that here was a demand zone, right? Market bought from here initially, so then it came down. As a trader, you'll be waiting to buy at this zone. That's the demand zone. So you'll be waiting to buy this demand zone. Now you see that candlestick pattern I showed you, that hammer is here again. So immediately the hammer formed, you know it's time to buy. Then you buy. Are you getting me? So you buy it upwards to this level. Now when it goes, it started selling again. You're not going to be part of this sale because that thing I teach you is not here. So there are other things here that I'm seeing, but I did not teach you. So I'm telling you so that you will not be trading everything. Just focus on the ones I've taught you, because that's how you will make money. There are many other reasons why I can sell this trade from here, but there's nothing I've taught you here that will make you sell it. So you don't know more than what I'm teaching you now. So you just you only buy this type of trade because you are seeing this type of thing here. Then you buy it upwards. So now it's coming down. It came to this level again. So it acted like trying to buy. It gave us that same pattern here, but it did not buy. So this one will be a loss. It's not every time you make profit in the market. So this one will be a loss. So then it broke it downwards. And after it broke it, what happened? Market returned back to that same level before selling. So after it sold for a while, returned back into it again before selling. Okay, so this is how the market does. So when a market breaks a demand level, that demand level becomes a supply zone. Are you getting me? So it happens,
Yes, sir.
both for an uptrend. So let me look for a scenario of an uptrend I showed to you. This particular level here now, here this thing is, let me draw this level that you're seeing here now. This is the level that the market sold from a little downwards. So when the market was going back up, it did not sell from it again, but rather broke it upwards. So immediately it broke it upwards, it came down again. Let me clear all these things. So as the market broke this level, what happened? The market broke it like this and came back to it. So it came back to it and then started buying. Are you seeing this? So that is,
yes, sir.
That's the way the market moves. So this supply zone has become demand zone after the market breaks it. So once the market breaks a supply zone, it becomes a flip zone. So that flip zone is now the opposite of what it was before. So that's how the market continues to move. Are you with me? So this is supply and demand strategy. So wherever the market is buying from is a demand zone. Wherever the market is selling from, it is a supply zone. Is this simple enough?
Yes, sir, it is.
Okay.
Wherever the market is buying from is a demand zone.
Yes.
And it's the bottom, it's from the bottom.
Yes.
Whenever the market is selling from, it's the supply zone and it's from the top.
Yes. So the market sells from top, it sells from higher prices. So why it buys from lower prices? That's the way it is. So just like every market woman in the market, if you want to go to market and buy something, you buy when the prices are low, you sell when the price is high. You understand? So that's the way it is.
Yes,
so when we say market at the top, it means price is high. Okay, so top is high price, bottom is low price. All these things you are seeing here, and all these candlesticks you are seeing now, they are prices, they are price levels. You can see the number at the corner here. You can see this side. I just drew the red box. These are price levels. I get it, man. So every part of this chart is linked to the price level. Every part of this chart is linked to the price level. So that's the way the chart is. Okay. So now basically we've done what supply and demand is. I don't want to rush you. So what we are going to do is I'm going to teach you what how to place a trade, stop loss and everything, so that you can start practicing what I just taught you right now. Okay, but there are many other things I still teach you inside, but what I've taught you just now is very simple. What did I say? If you see a place that was previously a supply, that means a place that market sold from, like in this case, once the market breaks it upwards, then know that market will come back to it later and it will buy. So this is a level that the market, when the market was going up, when the market was coming, the market came down a little like this, then it broke it up. So you find out that the market, after it broke it up, a point came here, the market bought from it again. I seen it, it came back again, it bought from it again, then the market also continued coming down. It was coming down, then it got here again and it bought, though it didn't buy for long. So there are things I have seen in this place that would have made me not to enter this buy. I will teach you all those things later. There's something I have seen here, something happened here. I'll tell you about it later. So that's the reason why the market is selling from there downwards now. Okay, so that is how you look at the market. The market will always buy from a demand zone and sell from a supply zone. So for you to confirm a demand zone, a place market sold from initially. So if you want to buy from a demand zone, like I've taught you, use this candlestick pattern I told you before as a confirmation. All these candlestick patterns as a confirmation. I don't use them to trade. I just look at the market. I know where to buy instant. Okay, but as a newbie, I'm using it to guide you for now. It does not mean that when you have started or you are mastering trading, you will not do other things. You will do other things. But at the beginning like this, in order not to be discouraged with too much losses, you have to focus on the small one I'm teaching you for now. Do you understand me? So that is how you are going to do it. Okay. So now, before you have a question.
Please, I want to understand. Hello. My question is, can you hear me?
Yes.
Okay, my question is, if I want to take a trade, is it just that hanging man that I should be looking at for, or are there other things I should be looking out for confirmation before taking a trade?
I've only taught you just supply and demand now. I'll teach you something else you will combine. Okay, we can't go into that now. I will teach you about liquidity. There's something we call liquidity. There's something we call order block. There's something we call fair value gap. There's something we call imbalance. So I will need to explain all of those things to you in order for you to have a complete holistic idea of how to buy and sell. But it does not mean that you cannot buy with one of these in isolation. You can buy with one of these in isolation. So but you use the other ones to add together so that you can have further confirmations. Do you understand me? So you can have confirmations. Okay, you can see that you can see that this particular candlestick, anywhere it appears at a demand zone, market will buy. See it here again. As it appeared at the top, the market sold. That is enough for you to be making money for now. It does not mean that everywhere it appears it will work. Okay, so for example, look at the same candlestick here. I don't know whether you can see. Let me draw it for you. That same candlestick is here. This blue candle now. But you are not going to buy from there.
Yes, I saw it.
Because it's not at the bottom. Are you getting me? So then also this particular one, it appeared here. Then let's say you now sold. The market also went up first before selling again. Are you seeing it? So that's the reason why there are other things you look at. Okay, it's not like the market will not eventually sell. But what if after you sold it, it now started going against you for some time? Then you not even touch your stop loss. After touching your stop loss and stopped you out on a loss, then it started going that direction. You now begin to blame yourself. So there are many other things to still look at. Okay, but I'm only just saying we need to start trading now so that you can be practicing this one. You have an idea of what trading looks like. Okay,